Yo, what's up YouTube? I'm Evan, this is Marksman Trading, and the topic of today's video is how much to risk when scaling into trades. So we had a solid trade today on the S, we shorted the range, it was like a lower high exhaustion short, and I'll cover that. It was good exits, good entries, but the issue I had, and the issue that you guys might have as well, so hopefully this video will kind of be a bit of a help to you, is I didn't take as much size as I should have on these trades. And that's really been the case for most of my trades from this past week. So today I really sat down. I'm really going to try to kind of fix this issue. If you guys are new here, be sure to subscribe. I trade both stocks and futures. And if y'all are looking for a prop from the trade through, Apex has a 71% off discount for I think a little less than 2 more days now. So claim the discount using my code below or the link in the description and lock that in. So let's get into the recap. So here's the trade I took on the ES today, and as you can see, it was a lower high. We took 2 MES contracts, one at 1102 and one at 1106. But before I dive into the topic of this video on how much I should have risked for each scale-in, let's get into the reason for this trade. So as you can see, this trade was a lower high, and what I do before I take every single trade, as my mentor, the Honored Trader, taught me, is to define the day. So we're either ranging or we are trending. And today I defined it as a range day. And the reason why is because, as you can see here, we kind of moved down, based out, higher, kind of a high right here, higher low, higher high, higher low, but we still didn't have a lot of movement to it. Clearly it's not trending to the downside, right? Because we had these highs right here. On the NQ as well, you can see we kind of even had more range. We had this dip down here, this high, this low, consolidation, this high, this higher low. You know, we fell off of here. So I was just looking at price action, and I was thinking that we were ranging just by the price action. But also, I felt that we were going to range today because we have CPI coming out tomorrow, and we had a massive move this past Friday. And so after the massive move from this past Friday, you know, I'm expecting us to kind of consolidate because it was a huge flush, especially in semiconductors, which the market's been following lately, so NVIDIA and AMD. And then we have very important news coming out tomorrow. And so we're really probably not going to make a huge move until the news gets dropped. And there was no news today either. So I was expecting through all of that a range day. So I was looking for a range trade, but an exhaustion move. You don't want to just trade range just for the sake of range. At least that's how I kind of trade range. I trade the extreme highs and extreme lows. You don't want to get caught in the middle of all the chop because there's not good risk to reward, and the direction is kind of 50-50 on which way it could go. So that was the reason for the thesis, the macro thesis behind this trade. And so here on the ES, you can see here's the intraday 1 minute chart. We had a higher low, and then I was looking for a solid move up because then we get extended. It was exhaust out longs because they can't keep up the steam because we're probably not going to break out because we defined it as a range day, not a trend day. And so then I would look to short that as it kind of pulled back. So I've said it before, and I'll say it again. So the market's kind of like a rubber band at many times, and that's the idea behind taking these exhaustion plays. So as it gets stretched out, it's going to want to snap back. So that's why I don't want to short, you know, after it bases out for about 10:07 to 10:29. I don't want to short this pop up here because it just spaced out, right? It has room to kind of breathe and move higher. And so up here, though, after this long stretch from this pivot from like 10:45, we really didn't have any pullbacks. So buyers are definitely kind of running out of steam, and they really won't be able to push higher if our thesis for a range day is correct. So that's identifying the thesis and then identifying this pattern that forms to be able to trade off of. So now let's get into the scale-ins and the topic of this video. All right, so I took my first entry as a starter down here at 1102, and I got filled at like 51.78. I had my stop loss all the way up here to previous day's low at like 51.85.5. I have it marked out with the yellow dashed line. And the reason why I had such a wide stop loss is because when I take starters, it's such a small amount that you can give the trade, you know, a lot more room to work because you're risking such a small amount. So yeah, that's why I had a wide stop loss, and I did lower it as soon as I scaled in over here at 1106. I did lower it to the intraday high of day. So this 930 candle right here had a high of like 51.82.5. And so when I entered the second contract, I was planning on scaling into this level because I felt like I was starting to become correct on the trade. The NQ started failing previous day's low right here, as you can see. And so I was watching all of that. I felt like it was about time for it to roll over. We had these topping tails here, and that's what sold me on the second scale-in, along with the NQ failing. So I lowered my stop loss, and all of that was good. But the issue is, even though my stop loss was lowered, I still had a very small size than what I could have to that tight of a stop loss. So when you have a tighter stop loss, it allows you to have more share sizes because you still have less risk. And that's because, when you have a wide stop loss, you're risking like 50 cents per trade or per share. But when you have a lower stop loss, you could be risking like 25% cents per share. So you can use like double the shares that you would with a 50-cent wide stop loss. And so that applies here. We had a wide stop loss. We scaled in some more, had a tighter stop loss. So we'd be able to even take larger size. But the issue is that I didn't take larger size. And that's the point of this video, is I need to kind of get rid of that fear of, losing on a trade. And so I got rid of over that fear from a couple weeks ago where I couldn't pull the trigger on any trade. But now I'm at the point where all my trades are starter trades, and I've been unable to capture very big gains on any one trade. And I know that the one time I take a full size on a losing trade, it's going to wipe out a lot of my gains from a lot of winning trades, because they're all starter positions. They're all very small size. And so I need to start accepting the risk and accepting that, okay, I might be wrong in this trade, but I feel like I'm still going to be, I feel like the trade is kind of playing out in my favor. So when I do scale in, I do need to scale in with more size because I can't just take everything off a starter. If that all kind of makes sense, I'm really trying to share kind of my open thoughts on trying to fix this issue because I've just been kind of dealing with it this past week and I'm trying to create a solution. So for me personally, I'm kind of making a rule that if I do scale in, and I probably will scale in into more trades this upcoming week, I'm going to take about half a size when I take my second scale in. So what I mean by that is by the time I take my second scale in, my shares should be at least half of what I am willing to risk on that trade to my stop loss. So here, I think full size was like 9 shares, so I should have been up at least 4 contracts instead of 2 to my stop loss up to here. Because even let's say even I don't even use the stop loss, 4 shares or 4 contracts still isn't fully sized up to previous day's low. So yeah, and also if I start to scale in, that means I am more confident that the trade is working or I'm getting a better average. And so either of those allows me to take more shares. I don't have to be afraid when I'm scaling in, because when I'm scaling in, I'm either getting proven right or I'm getting a better entry. And so I should be taking more shares than my starter, because a starter is just to get a feel for the stock and how it's moving. And then scaling in more is starting to build that position. And that's what I really need to accept, is the risk on the full position, not just the starter. And yeah, that would have been way bigger gains today if I did that, because we exited on good flushes over here at 1107 and 1110. Unfortunately, we missed this huge flush at 1111, but still decent exits, but it should have been a way bigger trade. And yeah, so that's the game plan for the rest of this week, is to have better size once I start taking that second or third scale in. So I might use like quarter lot position. So my starter might be like 25%, and then I add another 25% for my second position. So that way I have at least half of what I should be risking, or half of my full size by the time I have 2 scalens in. I'm going to try it. I'm going to see how that works. Like I said, I'm still working on trying to figure out this whole scaling in process, and I want to find a balance between not scaling in too fast, because I have a tendency to do that, but also not putting myself in a position where I'm not making much off of my trades because I'm being proven right. So I think this was enough information today to tell me that I should have scaled in more. And yeah, so I'm going to capitalize on that this week, and I'm really going to work on that. Trading is all about reviewing your edge and your trades and seeing where you need to adjust and making appropriate solutions to fix that. And if that doesn't work, then try something else. So I hope you guys, got some value out of this. That's just a lesson that I learned today and over this past week. So yeah, that's about it. Be sure to comment, like, subscribe. If you have any questions about this video or my edge or my process, be sure to just hit me up. You can DM me on Instagram, or leave a comment on one of my videos. We still have that Apex Trader funding discount going on right now, and it's 71% off, like I said earlier. So if you use my code, let me pull that up real quick. If you do use my code below, you can get 71% off, and you can pass it in 3 days. So you don't have to pass in 3 days, but you can if you want to. You don't have to wait like a full 10 trading days to pass it. So that's pretty cool, and it ends in a little less than 2 days. And yeah, so use my coupon code below or the link in the description, snag that discount. I trade through Apex. I haven't had any issues with them. I really enjoy trading these prop firm accounts, and we're close to getting funded. We're only $300 away now. So we're really close. I think hopefully we'll get funded by the end of this week or the beginning of next week. We're having really good stats. As you can see, we are up roughly, we have a success rate over between this week and last week of nearly 78%. So that's solid. I'm really feeling like I'm starting to understand trading these levels and scaling in and stuff like that. But clearly videos like today are made because I have a lot more progress left. But yeah, so that's it. Thank you guys so much for watching, and I'll catch you guys in the next video. God bless. Peace.